Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director, Head of Research here at Red Cloud Securities. I'm delighted to host another Red Cloud webinar on uranium today. We are going to hear from ATHA Energy Management, including CEO Troy Boisjoli and Senior VP Business Development Ryan Gaffney. Now, during today's webinar, they will provide an overview and outlook, and we'll take your questions. We'll get to as many questions as we can, and you can type them into the chat box. Before we kick things off, first we need to discuss the fine print. During this ATHA Energy webinar, forward-looking statements may be made. I direct listeners to their forward-looking statements outlined on page 2 of ATHA's corporate presentation. That can be found on the website athaenergy.com. For Red Cloud Securities, Inc., I highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider a particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on ATHA Energy. With that, Troy and Ryan, why don't you take it away?
Thank you, Dave. Appreciate the intro and appreciate the opportunity to present to Red Cloud today. So with that, we'll spend, just to give you a context of what we're going to get into, we'll spend a bit of time talking about the uranium market as we see it right now. Obviously, looking at 2024, the price of uranium on the spot market ran up above $100, settled back down just south of 80, and now is rebounding north of 80 again. Our business is uranium exclusively. We have a very aggressive growth strategy at ATHA. We came to market in April of 2023 to execute on that growth strategy. So from a macro perspective, it's important that we step back, that we understand where we're at in the market, that we challenge our assumptions and re-gauge and then execute based off that. And as a function of that, we have recently took a step back, looked at the macro, and our conclusions are, as with most of us on this call, this is a uranium market that we have not seen before. And it's for a few different reasons. One of them is you look at the overwhelming amount of momentum and support for the industry across, call it the Southeast Asia, areas and environment, as well as the Western sphere, North America and Europe. There's significant amount of momentum that is lining up on the demand side behind the uranium space. And the fundamental driver for that is momentum to decarbonize the electrical grid. That's tied into increasing energy security across those nations, but that's also directly coupled in with a very pronounced shift in the public perception and public support for nuclear across the board that goes right from the individual on the ground and the perceptions around just a general public's perception around nuclear energy, right into some of the largest financial institutions. If you've been following the news recently, there's a $100 billion fund that was just announced with a combination of BlackRock, Microsoft, etc., that is supporting the build out of AI and energy in support of that. A couple weeks ago now, you had Microsoft and Constellation, where you have the restart of the 3 Mile Island facilities with a long-term power purchase agreement in support of refabricating and restarting that facility. So unprecedented support within this cycle coming at all levels, and it's very early days in terms of that demand buildup. Now, that's not just from a climate change perspective and looking at net zero emissions. It's also just fundamental. Nuclear energy is the highest energy density source material that we have on Earth that we know about. You're looking at energy capacity orders of magnitude higher than conventional energy sources, that being hydrocarbon-based sources, natural gas, gasoline, etc., right down to wind and solar, which aren't even are off chart to the left here. And so the ability for nuclear to continue momentum despite regardless of where we're at within net zero emissions targets, it is a fundamental clean baseload supply of energy. we're at a multi-generation inflection point. You look at the stack up and the building up and the layering on of the demand based off where we're at right now and where we're projected to go forward, both with the utilities and power plants under construction, the planned and proposed. It is not similar to 2005 through 2007 for those of us who have followed the uranium cycles in the recent times. What it's actually analogous to is the initial adoption of civil nuclear energy in the Western sphere from the 1965 through 1980 timeframe, and that's what we're facing right now. But the big difference is that the amount of supply is significantly reduced from that period of time, and so we're in a function where we have, we have demand security and we have supply uncertainty, and a very pronounced structural deficit within the supply-demand portfolio of the nuclear energy space. But the near-term catalyst in our mind, when you look at some of the nuances of the nuclear energy space and of the supply side as it relates to uranium into that fuel market, it comes on long-term contracting cycles. And the catalyst in that 2006, 2007, 2008 run up, where the spot price went from in the early 2000s in that $8 a pound range up to 25, up to 35, ultimately peaking out at about $138 per pound USD on the spot market. That was driven by a contracting cycle. And when you look at the amount of pounds that are uncovered under contract in that period of time relative to the contracting cycle that we're entering into, in our view, that is the upward pressure and the catalyst that is going to drive the price of uranium on the spot market and on the term market moving forward. And you look at where we were at in 2006 relative to where we're at in 2024 from a contracting perspective. Very similar situation. And so, we reconcile that back to ATHA's strategy with an aggressive growth strategy on the left side of a commodity curve. And we really like where we're at, and we like what we see or what we believe is going to be ahead of us within the next 12 to 18 months. I think most of us have seen these charts. You look at the buildup of the supply-demand profile over the next 5 years, over the next 15 years. And it's hard to get around the fact that we are in a structural supplies deficit. You look at the leading development stage project that's out there in terms of the size and scale. That's probably NextGen's Rook I project. We're going to need 5 of those that's going to come online. And the reality is there isn't 5 of those. And so the structural supply deficit is real. And so as a function of that, the time to invest in exploration projects and development stage projects in the uranium space that are needed to fill that gap is now, given the timeline it takes from exploration through to production and development. I probably won't get a whole lot deeper into the macro side of the story, but one important factor is you look at supply demand and you look at supply demand projections, but then you also overlay geopolitical risk on top of that. About a significant percentage of the supply comes from areas that have real and emerging geopolitical risk overlays on top of them. You look at Kazatomprom, you look at how Rosatom has moved closer into Kazakhstan, you look at how China has moved closer into Kazakhstan. You take Niger, for instance. Niger had a coup about this time last year where the supply coming out of that nation carries significant uncertainty. And as a function of that then again underpins ATHA's strategy to grow the largest uranium exploration company in terms of the scale of our portfolio within the North American sphere, which in our view is going to become increasingly more important when you consider geopolitical risk overlays on top of this supply-demand profile as we move forward. And we're into a period right now where, you look historically at the uranium space and you'd say that, relative equal split or nearly equal split between the demand side risk and supply side risk. The risk of demand increasing and executing on large scale civil nuclear projects was clear and present that has now been, completely shifted, and the asymmetry within the risk profile now sits squarely on the production side. You have the world's largest uranium suppliers, Kazatomprom, Cameco, Orano, that all have risk in their portfolio. And the supply side risk is real, and any supply disruptions over the near term are going to have significant shocks to the market. Think back to the flooding of Cigar in the last cycle. Bear with me here as I move through and talk about ATHA specifically. Now, under the context of what we view is the most bullish uranium market we have seen in our generations, more so than the 2005 through 2010 timeframe, based off of the pure fundamentals that we see in the market. ATHA has positioned a company as a new entrant into the uranium space with a very aggressive growth profile that has grown significantly and executed on that growth profile since we came to market in April 11th of 2023. Based off what we've done to date, we have established a company with a leading exploration portfolio across the best uranium jurisdictions in Canada, that being the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. We are very well funded. We started the year off with about $60 million on the balance sheet on a pro forma basis between 92 Energy, Latitude Uranium, and ourselves. We acquired those two companies within the last year. We have built a very strong technical team that is backstopped by people that have either explored, developed, or produced tier 1 uranium assets the majority of their careers. And as a function of where we're at in this pullback, we see a significant amount of value accretive opportunity as we continue to execute on our strategy moving forward. Briefly on the cap table, give you a bit of a build up here. 277 million shares outstanding. On listing, we had about 135 million shares out. We acquired both 92 Energy and Latitude Uranium in an all-share equity deal, issued equity ATHA paper at $1 per share, about 65 million shares respectively. To date, Ryan, we've raised about $55 million into the deal as ATHA alone. The vast majority of that has been done at $1 as well. We had no warrants in our system. We did inherit some warrants from Latitude Uranium. As a function of that conversion price, those warrants have a strike price of $1.85. In terms of coverage, we have very good initial coverage from 8 Capital, from Beacon, from Canaccord. As Dave mentioned, he also has a note on us, and Dave's very aware of the projects. And from an ownership perspective, just under 25% founder and insider ownership and around 27% institutional ownership. Where are the assets based? The Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. The Athabasca Basin requires no introduction. In my view, it is the best uranium jurisdiction in the world for a number of factors: size, scale, and grade, existing workforce, geopolitical jurisdiction, etc. Into the Thelon Basin, I believe the Thelon Basin is one of the opportunities within this cycle. It was a basin that was at one time connected with the Athabasca Basin. Is a known uranium jurisdiction, but as a function of location has been highly underexplored relative to the potential over previous cycles. Just to the south of that, we have our Angulac project that is essentially in the middle of the Angulac Basin, or the Thelon Basin, and the Athabasca Basin. That is one of the largest, highest grade uranium deposits outside of the Athabasca Basin. Then we also have the Central Mineral Belt, which is directly adjacent, Central Mineral Belt project, which is directly adjacent to Paladin's 127 million pound Michelin deposit. We have an exploration at scale approach, which we have been executing on over the last 14 months. That has to be backstopped by a talented team. For myself, I had the ability, or had the good fortune of coming up through Cameco Corporation. I was an exploration geologist there for a number of years, transitioned over to operations, had the good fortune to act as a chief geologist at one of their operating mines for a number of years. And then during the uranium downturn, so to speak, when the price of uranium was reaching decades lows, I had a tremendous opportunity to participate in the development of the Rook I project, right from a maiden resource stage right through to feasibility as the Vice President of Project Development, Operations, Exploration, and Community for NextGen. Our technical team is backstopped by Cliff Revering. He's a guy that came up through Cameco, Orano, SRK. He was the chief geologist that brought Cigar Lake into production in the recent time frame, and he is supported by a talented team of geologists. Our capital markets team is equally as qualified, self-evident by the fact that we've raised about $55 million into the deal across institutional shareholder bases within the last 14 to 18 months. The exploration outlook for 2024, we've taken a risk-adjusted exploration approach where we're investing in a range of our assets, right from our most mature, which is Angulac, backstopped by a 43 million pound resource, through to Gemini, which is a recent discovery on the edge of the Athabasca Basin, through to our generative stage portfolio, which is 4.5 million acres of exploration property across the Athabasca Basin and 3 million acres across the Thelon Basin. So looking at our portfolio in a slightly different way, from established resource to recent discovery, which I just touched on, to a carried interest that we have, which is a unique aspect of our asset buildup. We have a 10% carried interest in a large percentage of NextGen Energy's exploration portfolio, as well as 2 projects within ICYMI's land package. That is all backstopped, as I mentioned, by the largest exploration portfolio, uranium-focused exploration portfolio within North America, if not globally. Bringing this back to a capital markets perspective, how does our strategy relate back to the capital markets? Well, you look at development stage companies within North America with North American uranium assets and Canadian uranium assets in particular, and it's a very small list. You go with the leader in the space, which is NextGen, which is, developing the world-class, truly world-class by every metric, Rook I deposit, and out in front, rightfully so, from there. Very good asset that Denison is developing using an innovative technology in the Athabasca Basin with the Phoenix project, the Wheeler River project, through to Fission and ISO. And there's a big gap. From a capital markets perspective, there's a big gap between development stage companies and exploration focused companies. Based off of the work that we've done, the acquisitions that we've made, we view our trajectory as moving to the left on this graph in a de-risk way, based off the work that we did at Angulac this year, in materially expanding the footprint of mineralization there, then subsequently de-risking the next stage of growth, which comes with a resource growth phase, getting ourselves to a tipping point and moving ATHA into a development stage company based off of results in the field. So what we've done to date is take, again, looking at deploying and investing dollars into the ground across a broad spectrum of exploration properties, all on the left side of the Lassonde curve, in a way that is very aggressive, deploying $30 million into the ground in a risk-adjusted way. So 40% of that budget is going into Angulac, 30% is going into Gemini, and 30% is going into our generative stage projects. Importantly, though, that's all on the left side of the Lassonde curve, with the maximum amount of torque that you can build into a portfolio. And just to benchmark ourselves where we're at relative to that progression, we have only to date released 2 drill releases out of Angulac, in which we had an opportunity to communicate the radiometric results. We have assays pending based off lab turnaround times. We expect those to come within the October timeframe, which will be able to communicate results in terms of assays from Angulac. Now, why do we like the Angulac deposit? One, there's a very high metal endowment here, and that leads to us to have a view when we acquired the project on a project and an asset that has material growth potential. You look at that from an exploration perspective. You look at the geology and the geologic targets. LAC 50 was wide open. It was not constrained on strike. It was not constrained in the hanging wall, footwall, or down dip. And in addition to that, there was multiple discoveries outside of the LAC 50 trend. Now, you look at the performance performance of this resource over the years, and it went from 14 to 27 to 43 million pounds year over year over year. And intuitively, you don't see performance like that when you're at the edge of a system. And so we believe that the growth potential there is significant, but growth potential that is based off of a foundational profile that is very attractive. 43 million pounds of historic resources at a grade of 0.69% U3O8. 0.69 is about 16 pounds of uranium per ton of rock. Now you look at modern pricing, even long-term pricing in the $80 range. That's very attractive. You can do the math on that on a value per ton basis. And then I back it up and I look at my experience and our team's experience mining uranium in a conventional underground setting. Look at directionally call it $300 to $400 a ton based off comparable projects out there and comparable operations. And so as a foundation internally, we like those metrics. And so now the critical path for us is adding the scale that we believe is there. And that's where our 2024 program came in. And that program, we had 25 holes, just over 10,000 meters of drilling. All of them were step out and expansion holes. We put a number of holes, about 12 holes, into the LAC 50 trend itself. Every one of them expanding mineralization. You go then into parallel structures. You have this is structurally controlled uranium mineralization. And what we've been able to do is outline mineralization within 3 additional parallel trends outside of LAC 50. So you look at the LAC 54 trend to the north, LAC 52 trend in between that and LAC 50, and then the LAC 48 trend, all of which are mineralized, all of which we can map out and constrained based off the geophysics and the fertile envelope of rock that we see in which future resource growth is going to come. And that's going to come through expanding on the LAC 50 trend, expanding on the LAC 52, LAC 54, and the LAC 48 trends. And that's only within a very narrow snapshot of the existing resource and does not yet capture the entirety of the exploration potential that we see on this project. It is a project that we view as having a very high metal endowment. You look at the conversion rate from exploration targets through to drill hole intersections, and it's very high. It's around 90%. And based off my experience, that is unlike any other project I've worked on. And so we're at a position right now where the work that we've done over 2024 has significantly, in our view, de-risked the next stage here, which is material resource growth that then kicks you over into a development stage on this Angulac project. That then gets us into Gemini. Gemini is a new discovery on the eastern edge of the Athabasca Basin. We bought 92 Energy for Gemini and the portfolio of exploration properties across the basin. The reason we like Gemini is it's a new fertile basement-hosted trend in the Athabasca. When you look historically at these trends, you start to think automatically of areas like the Rabbit Lake corridor. And when I'm on the ground at Gemini, I look at the size of the alteration assemblage, the lithology, the structural setting, the style of mineralization, and based off my experience, it's very analogous to the Rabbit Lake corridor. And so the opportunity for us here is to expand mineralization at GMZ, and in addition to that, explore along a fertile corridor in the eastern edge of the Athabasca Basin near the existing infrastructure, for which there are very few of these opportunities in the basin to do this type of advanced, higher probability exploration. We have 2 drills turning there currently. Then we have a 10% carried interest in NextGen Energy's exploration portfolio. So I'll refer you to the map on the left, the NextGen map. The dark black outline is their SW1, the SW2 and SW3 projects. The green overlay on top of that is the area we have a carried interest in. That's a carried interest to a bankable feasibility stage, at which point it becomes either a participatory interest or converts to an NSR at our election. We like this. We like this as an opportunity. NextGen has had a proven track record of making discoveries and material discoveries, and this comes at a time when they are returning back in a more material way to greenfields discovery-focused exploration as opposed to delineation or project development drilling. So we like this as an option within our portfolio. Then we move on to the Athabasca Basin. Everything you see in lime green there is ATHA. We have the largest land position in the Athabasca Basin by a significant margin. We have exploration properties in every past producing, emerging producing, and current producing jurisdiction that there is. And we have been very aggressive in maturing this land package. This is not a land package that is just sitting idle waiting for market considerations. This is a discovery-focused exploration team. We have deployed more geophysical surveys than any other company has in the basin over the years. We're up to over 3 million acres in geophysics, and that's intentional. The reason that we're doing that is to distill the highest probability, highest priority targets through an exploration at scale strategy amongst the largest land position in the best uranium jurisdiction in the world. And as a function of that work, we have now gotten to a stage where we're able to rank order and prioritize our projects that we intend to focus on moving forward. And then in turn, projects that fall further out into the schedule, we are able to pull forward exploration efforts on those projects through farm out agreements. And we have about $30 million in farm out agreements to date, where we offer earn-in opportunities to date up to about 70% of those projects, where we retain 30% exposure to the upside. This is pulling exploration value forward within this large portfolio of exploration assets across the Athabasca Basin. Then in turn, we also have the Thelon Basin assets. As I mentioned, Thelon Basin is analogous to the Athabasca Basin. You have Orano with the Kigavik project right at the edge of the Thelon, 127 million pound project that went through a bankable feasibility stage study in the last cycle. The reason the catalyst for us taking such a large land position in the Athabasca Basin was actually, or in the Thelon Basin, pardon me, was actually the civil unrest in Niger. We like the technical merits of the Thelon. We like the exploration potential. We like the upside. But we also like the fact that there is the third largest uranium producer globally that has an advanced stage project there. And their production profile, as I mentioned earlier, goes through Mongolia, it goes through Uzbekistan, Kazakhstan, and Niger outside of Canada. And so we believe a built-in catalyst for us here is that Orano at some point is going to, at some point we believe it's in the near term, is going to return back and start thinking about Kigavik again, which then gives us the ability to unlock the exploration value in the properties that we've matured here. We also have the CMB projects, Central Mineral Belt project, about 14.5 million pounds of historic mineral resources across a couple different zones at the CMB. Very compelling exploration property that is directly adjacent and surrounding Paladin's Michelin project. Of note, through the Paladin fission transaction, Paladin has communicated that they intend to advance a pre-feasibility stage study at Michelin by financial year end, speaking in Australian calendar terms, financial year end 2025, which you back up from that point in time, and they're going to have to become active at Michelin in the very near term. We like this project. It is a project that has multi-commodity potential. You look at not only the uranium trend, but there's also a copper trend. We're doing a significant amount of desktop work here to understand the true mineral potential here. It's at a position geologically where it's in at the intersection point between the Grenville, the Superior, and the Nain Pluton, which is a triple junction, and we're seeing a lot of metal endowment here. We like this project. We like this project as an option in our portfolio. So just to pull it full circle, we're a company that was intentionally brought to market at this stage of where we're at within the commodity cycle. We have an at-scale exploration approach. We have amassed one of the largest exploration packages in North America, if not globally, focused primarily on uranium exploration across the Athabasca Basin, the Thelon, and the Central Mineral Belt. We have a growth mandate, and intend to continue to aggressively expand and explore on the left side, or the early stage of this commodity cycle, which we see emerging. And we see this cycle as an unprecedented opportunity, hence our very aggressive growth strategy. We are well funded and we are well supported from a technical team and a capital markets team perspective, and we'll continue to grow. As evidenced by our execution, we started off a year ago at this time with 3.5 million acres of exploration property and a strong balance sheet. We've grown that to 8.5 million acres of exploration property, one of the highest grade assets outside of the Athabasca Basin. A central mineral belt project with a tremendous amount of potential, a discovery stage project within the Athabasca Basin, and that was all within year one. So maybe with that, Dave, I'll wrap it up and kick it back over to you for some questions.
Great. Okay. Thank you very much, Troy, for a very informative presentation. So we will kick off the Q&A portion of the webinar right now. Reminder to everybody online, you can type your questions into the chat box at any time, and we'll get to as many as we can. So we already have some questions here. Why don't I kick it off with something a little bit higher in the sky? Nuclear power, we are seeing a renaissance here. We're seeing lots of support from the general public across most of the globe. Do you see the recent discussions about energy requirements needed for AI specifically as really being another step change for nuclear?
100%, Dave. And I know. Okay, a couple of reasons. The couple of reasons why I really like that is the optionality. Is nothing that we talked about on the macro buildup here included any torque from SMRs or AI on the demand side. Okay, everything that we're talking about on the demand side is call it bird in hand type of stuff. It is reactors that have been funded, that are in the pipeline. Those are large scale civil reactors. Now, if you were to overlay the SMR build out on top of that, it is in addition to those metrics in which we discussed at the start of the presentation. And Dave, I think one of the key drivers, like you've been as close to the uranium industry as anyone over the decades, and SMRs are not new, so to speak, but they have been progressing in the background for the better part of a decade from a regulatory standpoint. And in my view, the key driver and the key difference at this stage as it relates to AI is that the customer is different. You think about utilities as a customer, they operate in terms of decades. They have decades-long projections, and their expectations are along that same timeline. Now, you think about tech companies. Tech companies operate on a very different frequency and different timeline. The AI build-out is coming now, and they expect that the energy source and energy security, as it relates to SMRs, keep pace. And so, I think that, in my mind, is a key catalyst that is going to drive SMRs from being a longer-term hypothetical solution to one that's going to be implemented in practice in the near term.
Mm-hmm. Absolutely. So you are a relatively new company, but very extensive land package, or even land packages, let's say, in 3-4 different parts of the country. What was your strategy when it came to acquiring ground? And I guess maybe let's specifically talk about the Athabasca. Were you targeting specific areas in the Athabasca?
Yeah, maybe I'll step back and just give you a sense on that, Dave. So, couple guys that have been very foundational in the uranium space over the years. They had an opportunity to vend in and participate in the, they brought the shell into Hathor, and then from there vended in the initial project into NextGen Energy. Those are the guys that spent a long period of time pre-listing, assembling the land position. And when you look at it, it's edge of basin, a few different areas, few different jurisdictions. Let's start in Alberta. Alberta is an area that, there's been a border fault there, as you're aware, and not a real change in the geology as it relates obviously the basement geology is different, but in terms of the sandstone geology, very similar, and has just been forgotten for the most part because it's in Alberta. And so that's an opportunity. It's early stage exploration within the Athabasca Basin, and greenfields areas lead to material discoveries. And then you look at across the North Shore. The North Shore of the basin is in the area that uranium mining started. But our thesis there is that, you look at exploration with a modern set of tools and a modern toolkit, and you can unlock additional potential within that area that I believe previous generations have just scratched the surface on. And then you go over into the Eastern Athabasca Basin. Well, the Eastern Athabasca Basin is uranium potential is driven by the Wollaston-Majatic corridor. And that's a line, basically put a line in between Key Lake and Rabbit Lake, and then look at our land position relative to that. Right. And so it wasn't a land grab. It was methodically, acquired over a number of years, brought to market. And then in terms of our Thelon Basin land position, very similar. You follow fertile trends. We captured those fertile trends undercover in the basin, and then looked at deep-seated crustal scale structures along other trends, and built our land position off of that.
Mm-hmm. Now, you said a lot of your projects around the edge of the basin. Is that a function of lack of drilling into the basement rocks? Maybe the previous generations were targeting the sandstone, therefore unconformity targets?
Yeah, and to be fair, we also have a sizable land position around the Passfield Lake area, which is actually well into the basin. And that's an area that exploration had not matured into and had not focused on over the years. Okay, it's deeper, but the difference between the last cycle and this cycle is the work that Denison's doing. And bringing ISR technology into the basin opens up deeper exploration potential. And the threshold, if you were thinking about what a threshold would have to be pre-ISR to explore and discover an economic deposit at, say, 800 meters depth, it would have had to have been north of Cigar Lake. Like, this is just my, speaking off the cuff. But that threshold has changed materially with ISR technology, which opens up an entire exploration corridor. But to your earlier point, you look at the history of exploration within the basin. Beaver Lodge District focused on shallow kind of basement hosted uranium mineralization, narrow vein style uranium mineralization. And then there was, with the discovery of Rabbit Lake and Key Lake in 68 and 72, somewhere in that time respectively, exploration focused on unconformity associated mineralization, and focused on unconformity mineralization for the better part of 3 decades. And it was just a shift in thought process. And so then as a function of that, things get overlooked, and basement potential gets overlooked. And so that's what we believe we'll be able to capitalize on moving forward on those areas just at the edge or outside of the basin.
Okay. Now, on the edge of the basin, you're pretty close. You're in the Gemini corridor. This has been drilled for the last couple of years with somewhat positive results. Modest grades here. Do you think you've really hit on its full potential yet?
No, not even. No. Bottom line is no. And the reason for that is, you go on the ground and you look at the core. I've spent a lot of time with boots on the ground in that Rabbit Lake corridor. I look at the geology at Gemini. We're up there in the Hidden Bay assemblage, and this is getting a bit technical. But the bottom line is that I believe it's early days there. You look at these uranium systems, basement-hosted uranium systems, call it Rabbit Lake, call it the McLean Lake corridor, call it the Key Lake corridor, the Patterson Lake corridor. And the commonality there is, when you're in a fertile structural corridor within the Athabasca Basin, it is more common than not to have multiple uranium occurrences. And those are then generally structurally controlled. And so there's lots of work to do there. There's lots of work to do to unpick the potential that we see at that project.
Mm-hmm. Okay. Now, you have a lot of land in the Athabasca, as we keep detailing. Little in resources yet within that basin yet, which is sort of typical for juniors in the Athabasca. How do you get from here to there?
Yeah, so it goes through discovery, obviously, and that's our at-scale exploration approach. Okay, and we were very intentional with this, Dave. You can envision a scenario where we would have looked at the overall land position and picked out, and geologists are famous for this, and I'm one of them, so I can speak openly about it, picked out our favorite project, and what does a favorite project mean generally? It's in areas that you have familiarity with. So you've worked adjacent to an area, you've worked, to bring it home. Like I spent a lot of years on that Rabbit Lake property, both as an explorationist and as a chief geologist at Eagle Point. Well, we have ground that, trends, the Collins Bay fault system splays off and trends into the hanging wall right into some of our properties. I've drilled holes directly adjacent to that property. It would have been very easy for us to just, based off bias and heuristics, move in and focus exploration on a very small portion of our overall land package. We didn't do that. We explored at scale across the entirety of our land position using a systematic approach to distill out the best exploration targets from a very large land position within the Athabasca Basin. And we believe that is, as a function of that, the targets that we get to distill out and derive out ultimately end up being higher probability targets just due to the scale. And so, the way to build resources goes through discovery. That discovery process for ATHA goes through an at-scale exploration approach.
Okay. Yeah, I'd say analysts are guilty of having pet projects as well. I've followed the next one since about 2009, been there 3 times. So let's leave the Athabasca and speak to Angelac and Nunavut. 43 million pounds so far. 0.7% is the second highest grade in Canada outside of the basin. This is a new area for you, but you are approaching it with the experience that comes out of the Athabasca Basin. So how has this really changed the way the Angelac project is being explored versus the way it was looked at by past exploration?
Well, I think the first thing, Dave, is we're looking at it from in the context of doing real work and driving it forward in a real way. And what does that mean? And looking at what the thresholds are to advance the project. And we as I mentioned in the presentation, we like the foundation. The grade profile we like the value in the ground, and now it's about adding the scale. Okay. And if you think about what our options were going into the summer, and one of them would have been incremental resource growth. Right, we could have put dollars into incrementally expanding the resource from, say, 43 million pounds up to, pick a number, but that would have gotten us to just a higher number on that incremental growth platform into moving the project forward. So instead, what we did was we stepped back, we looked at the metal endowment that we see relative to the LAC 50 trend, additional trends that had early indications of mineralization, and put holes into them in an aggressive way to expand the footprint of mineralization materially that now, in our view, has good enough visibility now to see a step change in that resource. Okay, and so it's about how do we optimize this path forward from having what we view as a very good foundational uranium resource to reaching that tipping point that moves it forward into a development stage project, okay, in a de-risked way. And so that's what this program is about. It was about de-risking it. From a geologic perspective, though, very good work in the past to get us to where we're at. I looked through the technical report. I've done a fair amount of resource work in my background. Cliff Revering, resource geologist, he was a QP for SRK on a number of uranium resource. We have some in-house horsepower to understand mineral resources. We like what's been done there. We have no issue with it. But our foundation is about growth, and that fundamentally comes in having very good geologic control and understanding what is localizing mineralization. And based off the work that we've done this summer, we feel like we're moving into the area where the geology becomes predictable. And that's what we like from a risk perspective.
Mm-hmm. This was previously thought to have been a beaver lodge type deposit, and you think maybe it's basement hosted, maybe it's hosted by tuffs and shear zones. What's the difference? Can you maybe break that down for people?
Yeah, I think ultimately then it just becomes it becomes more similar to an Eagle Point style deposit where you have uranium mineralization that's localized. In this instance, and in this setting, ends up being in a tensional or an extensional structural environment. When you look at the Snowbird tectonic zone blowing through there in a northeast orientation, you've got kind of intravolcanic sediments and tufaceous horizons, which are locally graphitic and sulfidic, and those end up, localizing structure in that tensional orientation. And so we're seeing this repetition of pattern where we're seeing these tufaceous units that are brutally structurally disrupted, locally infilled with uranium mineralization in that extensional environment. And then we've demonstrated that to be repeatable, not just in the LAC 50 orientation or, LAC 50 corridor, but north of that in LAC 52 and LAC 54, and then south of that in LAC 48. And I'll maybe point out that we're also in the process right now of flying a property-wide MMT survey because we're sitting right at the edge of a basin, and this fertile mineralized trend has never been explored for under this basin. And so at a property scale, I don't think I've seen a project that has a metal endowment like this project across multiple locations. And I see in the chat here, someone is very familiar with the project because they bring up dipole. Well, that's kilometers away from LAC 50. Multiple mineralized holes into dipole. We didn't even get there this summer. But that's another area. And then on the other side of the basin, you have 9 iron. Okay, and it's mineralized as well. And so, based off of the, amount of evidence we have to date, we feel that we're at the very early stages of unlocking the true metal potential of this Angulac project.
Yeah, you sort of started working into my next question there. It's such a vast pipeline at Angulac. How do you go about and prioritize targets? Because you do have your LAC 50 area that already has resources that you want to show that there's material resources that are good for far north. But then you've got other zones that are known. You've got other showings that are known and targets. So across the wide package, how do you go about and prioritizing everything?
Yeah, it simply comes down to an allocation of capital and what we view as our material objectives. Material objectives for this next phase is a step change, right? It is aggressively, we de-risked resource growth through the work that we did this summer by outlining the envelopes that we outlined. Next stage is execution on that, but at the same time, we don't want to discount the project by ignoring the exploration potential. So as we're into a resource growth stage, we will continue to allocate dollars towards exploration and growth outside of that de-risked envelope. So that's a very long way of saying that we'll have drills that are building resource, and we'll have an effort to continue to explore with the drill as we're building resources.
Mm-hmm. And that works as well with your capital allocation on projects outside of the of Angulac as well. So like in the Thelon, another massive land package, relatively underexplored, looks a lot like the Athabasca. Is this a place you plan to ramp up down the road, especially as Orano looks like it might be dusting off Kigavik, another 133 million pound deposit, 0.55%, so great grades outside the Athabasca?
Yeah, exactly. It's one we've started on already, Dave. We announced a broader scale exploration program this year. Have it highlighted in our corporate deck, and that comes in the generative stage of our project portfolio. We aren't a land bank. Despite having such a large land position, we're active explorers. We've done work to set that project up and set certain areas up there to be able to advance into a more advanced exploration stream. We really like the potential there. You go from Kigavik, there's an east-west, east-northeast trend there that goes from Orano's property onto a former Cameco property. I see Dan Jerica in the comments here. Dan would be very familiar with some of the work that our respective former employer did in that kind of 2005 through 2008 timeframe, 10 timeframe in that area. Couple drill hole programs resulted in a couple discoveries. Okay, and so it's an area that has a metal endowment again that is high. In the most bullish scenario, Dave, I look at it as the work that's been done there at Orano, at Kigavik, is on the edge of the basin, right? Like, so if you draw an analogy back to the Athabasca, the first areas in the eastern Athabasca to be discovered intuitively, okay, were Rabbit Lake and Key Lake. Those are right at the edge of the Athabasca sandstone. And then what did you have after that? You had a lot of work that went into exploring along that Wollaston-Majatic corridor undercover. And then that exploration undercover led first to, I think Cigar was the first one, right, in the early 80s. And then, you just follow the train of discoveries from there. And so when you have a fertile uranium system that then trends undercover, and there is differences between these basins, certainly, but I think overall the bulk potential remains very, very high.
Right. Okay. Now you guys are spending $30 million in exploration spending this year. How much cash do you expect at the end of the year, and will you need further financing? And if so, what kind might you look for? Equity, royalty, offtake, JVs?
Yeah. So good question. So as I mentioned, around the cap table, when we put the companies together, when we put LUR 92 Energy ATHA together, we did a concurrent capital raise with that. We had about $60 million on the balance sheet as a function of that. Deploying 30 into the ground, closing costs, overhead. We'll be, it'll be in that 15 to $20 million range by year end, which has us in a very healthy cash position still, with no immediate needs or no near term needs to raise capital. We've built that resiliency into the company intentionally, and because not every as we're experiencing in 2024, Dave, not every bull run is straight up. Right. And having the ability to weather periods of short-term volatility in the market, in the capital markets, is a key part of our strategy and part of our, risk mitigation and resilience as we continue to grow. So certainly no near-term needs to raise capital, et cetera. But, we'll continue on with an aggressive kind of exploration strategy as well.
Okay, sounds good. So maybe just to wrap it up, obviously people's important here. Maybe touch a little bit more on the backgrounds of your team, specifically you and Cliff and Ryan, especially what you guys bring to it, because you've got exploration, but you've also got operations and corporate development backgrounds. So.
Yeah. So for myself, I had mentioned I had an opportunity to grow up at Cameco, came up through their exploration group, had a chance to move over and join their operations team at Rabbit Lake. I was a chief geologist at Eagle Point for a few years, and then I moved over to NextGen Energy, spent some time on the other side of the basin developing the Rook 1 project. At Rook 1, I joined just at the stage of the maiden resource. And had an initial focus on resource optimization. That scope expanded to include managing the engineering work from PEA through to FS, through the environmental work, provincial and federal regulatory submissions, as well as the engagement work that we did during that period of time, which was foundational to everything going on a project execution perspective. I mentioned Cliff Revering on the technical side, Orano, Cameco, SRK, qualified person on a number of competitors' mineral resources. He was the chief geologist that brought Cigar Lake into production. You go down our team, and it's a group of people that have been involved in exploring and discovering, advancing and or operating tier 1 uranium assets for the majority of their career based in the Athabasca. And then the part that I appreciate as a technical guy is what Ryan brings to the table, what our capital markets team brings to the table. And maybe Ryan, just please give your background.
Sure. Yeah, I've had a background in investment banking for the last 22 years, and was fortunate enough to be part of the last cycle in the the run up from 2005 to 2010, and was involved with some of the biggest uranium financings in that cycle, and a lot of M&A through that cycle in Kazakhstan, United States, in Africa, and very pleased to be joining ATHA with what I see as being one of the strongest technical teams I've seen in a junior uranium company.
Yeah, excellent. I think I agree with you. So with that said, guys, thank you very much, Troy Ryan from ATHA Energy, for speaking to us today.